Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An interesting countering bearish double yesterday. It was interesting for three reasons. Firstly, it followed a quite good looking key reversal up. Secondly, the top was capped again by the middle time, currently at 106.03 of the January to May 21 bearish Andrews pitchfork, backed by the declining short medium moving average, currently 106.19, and the mid-February to date downtrend, currently 106.41. Thirdly, because the support was the very same recent congestion area, 104.92 to 104.51, which contains both the February and March 2017 lows at the same 104.92 number. Hence, we may have had a try higher 2 days ago, but yesterday, well, resistances put a lid on that and the supports held up the market. This declining bearish pressure and stationary support is slowly squishing the market. This may possibly lead to a volatile period, much as toothpaste getting too quickly squished in a tube. Overall, we still remain in between this declining middle time above and the lower time below, currently 102.33 of this January to May 2021 bearish Andrews pitchfork that has done such an amazing job for over a year now. So far today, nothing much, still in between the resistances overhead and the supports below, and looking a little bit like a counter to the counter bullish harami right now. Cable, aka sterling against the US dollar. A second consecutive indecisive spinning top yesterday, also a quite long tail on it as well. The open and close remain roughly the same as the previous session, just over the June 2020 low at 122.48, and the low again roughly the same based on the May low at 121.54. Overhead, we still have the upper time, currently 123.51 of the late April, late May bearish shift pitchfork. This time not supported, but helped by the falling short moving average, currently 123.44, and paralleled by the short medium moving average a little higher up, currently 125.21. Seems the market may be waiting, though for the life of me I don't know why, as under the May 2020 low at 120.73 there is little support bar the middle time, currently at 120.12. Maybe it still is the previously mentioned enormity of the empty space below the May 2020 low. Recently I've put forward the idea that the action since late April to date is a type of bearish halfway hesitation. It doesn't look very much like that anymore, but I'll still keep that on for now. Initial target X in the 117.5 area if this pattern develops. So far today, a cautionary start, sitting on top of the June 2020 low and cautiously trying higher and looking like a possible bullish engulfing pattern right now. Euro sterling. A reactionary bearish double yesterday, which very nearly came a daily key reversal down, but didn't quite make it. Interestingly, the fall was halted, as it has been all week, just ahead of the neckline, currently at 85.70 of the December 21 to May 22 reverse head and shoulders pattern. This neckline is the extension of the rising upper trend line of the original and extended diamond pattern. Hence, moves above and below it are important. Just below this neckline we have the mid-April to date uptrend, currently at 85.45, which had previously been the base of action. Now just over the close we have the breached late May to date upper trend line, currently at 85.95. This short trend line has seen action above it, but only two single separate closes. Hence it being breached rather than broken, despite the large size of the breach. Prior to the recent pipe top, we've still had the following targets on the upside. For the smaller lopsided diamond pattern, you had a primary target X in the 86.80 area and a harder to get secondary target X1 in the 87.65 area. For the extended diamond pattern, we had a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Okay, for those two diamond patterns, Both primary targets, target X in the 8680 area and target X2 in the 8750 area. To recap, these were the primary targets of the original lopsided diamond pattern, extended diamond pattern, respectively. Well, they have both been reached. There are two additional items to discuss. There is the previously discussed big one, which had been triggered, but then the market started sending mixed messages. Spoken for months now of a very large falling wedge pattern, currently 84.46 to 81.27. This pattern is still in operation, but has fallen into shadows a little with the rising prominence of the diamond patterns. Although triggered, it still leaves us with some serious questions. You see, it has the most ambitious upside target of all, target X4. This pattern is in the 88.65 area, and is a really big ask. Well, recently, with the previously mentioned neckline, currently 85.70 of December 21 to May 22 reverse head and shoulders pattern. This support is also an extension of the rising upper trend line of the original extended diamond pattern. Primary target X5 for this reverse head and shoulders would be in the 87.75 area, and the secondary target X6 would be in the 88.60 area. Targets X4 and X6 are currently just off the top of my daily chart. So far today, we're caught up between a breached late made trend line and the neckline, which sums up a lot of the closes actually over this past 2 weeks, but we're now dipping below that neckline, which is interesting. Let's see if we'll go down to the uptrend. US dollar against Indian rupee. A bearish dark cloud cover pattern type yesterday, which was quite a feat considering the previous session was an indecisive spinning top with the highest high ever. Anyway, we'll have to see if this is a follow-on. Below there is some interesting supports from the breached but still formidable lower time, currently at 78.10. Of the mid-January to mid-April bullish Andrews pitchfork, along with a broken lower trend line of the recent ascending triangle, and that's currently at 78.07. And finally, the middle time, currently at 77.90, of the bullish shift pitchfork with the same move as the Andrews pitchfork. This last support is just now creeping over the interesting recent congestion at 77.89 as well. Meanwhile above, we have the old target X in the 78.30 area, which was the target for the whole of the 22 action, being a ragged bullish halfway hesitation, as well as the upper trend line, which is, to be honest, looks weak, and that's from the October to December 2021 move. So far today, well, a slightly higher open, then a drop to the lower time of the bullish Andrews pitchfork before moving back up. Now, I have a suspicion, nothing more than that we might just be getting ready for a possible key reversal or outside day today. Nothing definite, just a suspicion. US dollar against the Brazilian real. A second bullish white Mariposa yesterday that followed on nicely to the previous session's combined immediate countering bullish engulfing pattern and bullish open and close long white Mariposa. What was especially interesting about yesterday's action was how it was the first close over the middle time, currently 5:23.43, of the April to late June bullish Andrews pitchfork. This is the first contrary bullish Andrews pitchfork I had drawn for quite some time. Market also punched up and closed over the 50% Fibonacci on the March 21 to April 22 move of 522.76, but was halted by the overhead and now flatlining long moving average, currently at 524.88. This was nevertheless a step closer towards target X at 528.45. This is the target for the start of April bullish halfway hesitation. It's not a perfect one, but it is still there. Beyond that, we have congestion at 534.23. US dollar against the Mexican peso. A fifth bearish black crow yesterday and a continuing superb follow-on lower to last Friday's counter-to-counter bearish dark cloud cover pattern type and last Tuesday's bearish open and close black Mariposa. It's also the second day that the market saw support slowing the decline from the combination of the middle time, currently 20.0178 of the November 21 to March 22 bearish shift pitchfork and the flatlining short medium moving average, currently at 20.0236, though yesterday was the first close below both for about 2 weeks. Further below, we now have the broken upper time currently at 1990.09 of the bearish Andrews pitchfork for the same move as the bearish shift pitchfork. Somehow I suspect that this may not be that much of a support. And we need to look lower down at the April lows at 1971.68 as the next support. Overhead we have the declining medium moving average currently 20.1934 and the more powerful flatlining long moving average currently 20.4166. So far today, a slight attempt lower but a cautionary one. I'm not sure yet whether this is because of the lingering effects of the middle time and short medium moving average above, or the approach to the broken upper time below. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.